Hello there and welcome to another video. If you have any questions, leave them in the comments. If you want more videos on investing in stocks, please hit subscribe. Now, diversification is very important and it's something you should keep in mind whenever you're investing. You shouldn't have all your eggs in one basket or all your money in one stock or in one asset class for that matter, right? So it is important, and I'm not trying to discredit diversification as a concept of, controlling the potential losses, but most people think about it too much. They overdo it. Diversification shouldn't control your investing. It should just be a safety mechanism to make sure your portfolio is balanced and is not going to implode when shit hits the fan. So it shouldn't control your investing. It shouldn't be the first thing you think about. It shouldn't be a criteria of an investment, right? So when you're looking at companies to invest in, the most important thing is not what kind of company it is. If it's an energy company, healthcare company, tech company, the only important thing is to find the best company. Now, if that company happens to be the sort of company you're looking for, great. But you shouldn't start with diversification. Start with the company and then, use diversification, as I said, as a minimum requirement to your portfolio. So don't let it control your investment. Don't overdo it. Now, the second point is that diversification is meant to control your downside. So as I said, it's a minimum requirement. It should never be a criteria for an investment. So it shouldn't control your upside, only your downside. Because as soon as you overdo and think too much about diversification, trust me, it will control your upside. It will limit the quality of your investments, because you're going to miss out on companies just because you're already invested in companies like that. So the last point, don't create any rules or thresholds when it comes to diversification. Now, a lot of very successful investors do create rules and golden rules for themselves. I don't think that's a good idea. An example would be, you shouldn't have more than 5% in any stock. You shouldn't have more than 20 or 30% in one sector or one country. You shouldn't have more than 40% of your money in stocks, whatever. I really think this goes against the concept of investing, because the only thing that matters is to make as much money as possible. So you're looking for the best investment, not the best kind of investments. You're not looking for the investment that will make your portfolio perfectly diversify. And making these rules, again, will limit the amount of investments you can compare. And you should really find the best possible investment. So don't bother with the rules. Just make sure your portfolio is somewhat balanced. But I think creating rules is just ridiculous. So this is my take on diversification. Personally, I am well diversified. I think it just sort of happens naturally, because you shouldn't only look at tech companies or only look at energy companies. You're going to end up looking everywhere, and you'll find companies in every sector that is going to excite you. So be safe, invest wisely, and I'll see you in the next video.